Hi believers, this is Amit from Waya team. This is the final video of the year. 2024 as a year has been a remarkable year for us. It has been a year of growth with many of our stock picks and multi-baggers delivering stellar results. We exited 8 multi-bagger with average return of 85% and average holding time of 9 months. We are also very bullish on our current holdings like Capacite, which is already 55% up. It has been a year of evolution, also, where we have realized our clients' interest lies in multi-fold returns rather than quick gains. This year, we have also introduced Portfolio Management Service (PMS), catering to people who wants to invest big chunk and have their money compound over the years. Via PMS aims to benefit most from the investment opportunities arising out of multi-year tailwinds in the select stocks. As we talk, and as per the returns, our PMS have been ranked 5th in India. Let's talk about the markets now. Indian equity market so far in 2024 has shown a lot of resilience in spite of major challenges we have faced like high inflation, weaker than expected earnings in Q2, general election outcomes, the FII's outflows, and geopolitical uncertainties. Despite all the headwinds, Nifty gained 9% over the year, while broader indices like mid-cap and small-cap gained by 24%. Key takeaway is that it's important to remain invested. It's important to think about medium term and long term because negative events present better opportunities to buy good businesses at a reasonable prices. At Waya, despite many stocks hovering around stop losses, we are holding the stocks maintaining our conviction on the fundamentals of the businesses. We only give calls on strong companies to avoid sleepless nights. Several investment themes emerged prominently in India, driven by economic trends, government initiatives, and sectoral growth. Here are the key themes that worked well for the investors in 2024 and should continue in 2025 also. First, green energy. The global shift towards renewable energy has significantly influenced the Indian markets. Investments in solar and wind energy companies have shown strong potential for returns, supported by government initiatives aimed at promoting green energy solutions. As of November, the total installed capacity of renewable energy reached 213 gigawatts, making a 14.2% increase from 187 gigawatts in the previous year, which is a growth of 15% odd. Among renewable energy, solar energy capacity is growing at 30% CAGR. We expect this segment to continue to do well in 2025 and give many attractive investment opportunities. We like KPI Green in this sector. Second, digital transformation, IT services, and data centers. India's IT sector remain a cornerstone of its economy, benefiting from the global demand for digital solutions and services. The ongoing digital transformation across industries positions Indian IT companies for substantial growth, particularly in areas like artificial intelligence and cloud computing. India's data center capacity is expected to grow by 66% by 2026 itself, increasing from 917 megawatts to 1521 megawatts. This expansion is fueled by the adoption of AI technology and rollout of 5G networks across the country. We like techno-electric in this space. Third theme, healthcare and pharmaceuticals. The healthcare sector has been resilient with ongoing investments in medical technology, pharmaceuticals, and healthcare services. Normalization in supply chain and short of key medicines in US market led the pharma index to return 36% YOY. Strides Pharma and Blue Jet is our favorite. The next theme is infrastructure development. Infrastructure remains a critical area for investment, bolstered by government spending on projects aimed at enhancing connectivity and urban development. Companies involved in infrastructure development have shown substantial gains, be it highways, dams, water treatment plants, or building constructions. Going ahead, January to March quarter is anyways the business end of the year when the government pushes for project completions. We expect capex to pick up. Recent announcement of some projects and tenders are further corroborating the same. The focus will be more on how much the government sets aside in the next budget, which is on February 1st, as it will set the direction for the next few years of growth trajectory for the above sector. Ashoka Buildcon, Interarch are some of our favorites. Defense sector. Given the geopolitical landscape, investment in defense have become increasingly relevant. The Indian government's focus on self-reliance and defense manufacturing presents opportunities for significant return in the sector. The Indian defense industry is projected to grow at a 14% compounded annual growth rate from FY24 to FY30. India's defense budget is expected to double between FY24 and FY30, with significant investment aimed at modernizing the military capabilities. Zin Technologies tops the chart for us. The next theme, recycling and sustainability theme. This is Waya's favorite sector. The overall recycling theme is anticipated to reach USD 20 billion by 2030, up from around 4 billion currently, with specific segments like plastic recycling expected to grow at a CAGR of 24%. The demand for recycled plastics is rising across various industries due to regulatory pressures and consumer preferences for eco-friendly products. Sectors like e-commerce and packaging are particularly driving this demand as they transition towards more sustainable practices. Many stocks from this theme shall do very well in 2025. Talking about what did not work in 2024 but can work in 2025, it can be a year of banks. Bank Nifty delivered just 6% returns for the current year 2024. After underperforming in the last 2 years' market rallies, BFSI valuation have become attractive, paving the way for increased inflows, particularly in private sector banks. Trigger year can be anticipated rate cuts by the Reserve Bank of India in 2025 that will further enhance the sector's appeal, and also the upcoming union budget will likely announce measures to boost private capital expenditure, which could drive growth in banks' corporate loan books. Concluding, in the last 3 months, markets have moved from broad-based bull market to a very narrow one. This trend may extrapolate and continue in 2025, which means we have to be more precise in selecting investments and be sure of earning growth. At Waya, our strategy is very simple. For 2025, we will focus on maintaining high growth, high quality portfolio with clear earning visibility. We will continue to prioritize sectors with strong order pipelines, operating leverage, expecting over 20 to 25% earning growth. We also are actively identifying new investment opportunities supported by strong tailwinds in form of multi-bagger and NPMS. Last but not least, 2024 has been a year of learning, which has strengthened our system and made us more confident about the tough and volatile years ahead. And a heartfelt thank to all of our clients who have made this year an amazing year for Waya. Your collaboration and feedback has been instrumental in shaping this year. We will be here to provide you with more data and insights across the Indian listed equity market in the coming year. Wishing you and your near ones a happy new year of 2025. Let's make it stellar. Thank you.